Bitcoin just hit a massive milestone that nobody saw coming, and what happens next could change everything for crypto investors. Welcome back to Crypto Insights, where we break down the most important Bitcoin news, predictions, and analysis you need to know. Before we dive into today's explosive Bitcoin updates, make sure to hit that subscribe button and ring the notification bell. New subscribers this week get access to our exclusive Bitcoin trading guide absolutely free. Now, let's get into the 5 crucial Bitcoin developments that are shaping the market right now. First, let's talk about Bitcoin's current price action and what the charts are telling us. Bitcoin is currently trading at levels that haven't been seen since the last major bull run, with technical indicators showing strong momentum. Trading volume has increased by over 200% in the past week, indicating serious institutional interest. The weekly candlestick patterns are forming a classic bullish formation that historically precedes major price movements. What's particularly interesting is the consistency across all major exchanges, suggesting this isn't just isolated market manipulation. The Fibonacci retracement levels are aligning perfectly with our current price action, giving us clear targets for the next move. Leading Bitcoin analysts are making some bold predictions about where the price is headed in the next 6 months. The recent approval of spot Bitcoin ETFs has ignited a firestorm of speculation, opening the floodgates for a new wave of institutional capital. This has fundamentally changed the landscape, making these expert forecasts more critical than ever as investors try to navigate what comes next. Michael Saylor predicts Bitcoin could reach $150,000 by the end of 2024, viewing it as the ultimate digital property. Other analysts are even more bullish. Cathie Wood of RK Invest, for example, has a long-term target well into the 6 figures, based on her firm's research into Bitcoin's potential to disrupt traditional asset classes. These are calculated projections from some of finance's sharpest minds. These predictions aren't just wishful thinking, they're based on concrete data about institutional adoption and market fundamentals. The primary driver is the staggering success of the new spot Bitcoin ETFs. Financial giants like BlackRock and Fidelity are now providing a direct, regulated on-ramp for institutional money. Billions of dollars have flowed into these products, representing a seismic shift as large-scale capital seeks exposure to Bitcoin as a hedge against inflation. This institutional wave is mirrored by growing acceptance at the national level. Countries like El Salvador and the Central African Republic have already adopted Bitcoin as legal tender, demonstrating its utility for financial inclusion. Now, other nations are signaling interest, recognizing Bitcoin's potential as a sovereign asset in an uncertain economic climate. This state-level acceptance further legitimizes Bitcoin on the world stage, adding another powerful layer of validation. With only 21 million Bitcoin ever to be created and institutional demand skyrocketing, the supply shock could drive prices to unprecedented levels. Compounding this is the upcoming halving event, a pre-programmed update that cuts the new supply of Bitcoin in half. The upcoming halving event historically triggers massive bull runs, and this cycle could be the biggest yet, as the predictable supply cut meets an unprecedented demand surge. The regulatory landscape for Bitcoin is no longer a Wild West, it's a rapidly maturing ecosystem. Governments worldwide are moving from a reactive to a proactive stance, with major developments coming from the United States and the European Union. In the US, we're seeing a significant bipartisan push for comprehensive federal legislation. Meanwhile, the European Union has set a global precedent with its landmark markets in crypto assets, or MiCA regulation, designed to harmonize rules, boost innovation, and protect consumers. A pivotal moment was the US SEC's landmark approval of spot Bitcoin ETFs. After years of rejections, this decision was more than a procedural step. It was a fundamental validation of Bitcoin as a legitimate, investable asset class. This move created unprecedented clarity for institutional investors, removing a significant barrier that had kept many on the sidelines. The approval signals that regulators are now more comfortable with the market's maturity, custody solutions, and sophisticated surveillance mechanisms. This regulatory clarity has opened the floodgates for institutional capital. We're talking about pension funds, endowments, and corporate treasuries, which collectively manage trillions of dollars. These conservative pools of capital now have a compliant and familiar pathway to gain exposure to Bitcoin. Leading this charge are titans of finance like BlackRock, the world's largest asset manager, alongside giants like Fidelity. By launching their own Bitcoin ETFs, they are lending their immense credibility to the asset and democratizing access for millions of retail investors. And this isn't just an American or European story. The domino effect is spreading globally. Jurisdictions like Hong Kong are launching their own spot ETFs, and financial hubs from London to Singapore are developing clear frameworks. This global convergence is creating a more stable foundation for Bitcoin's future, fostering a truly international market. Corporate adoption of Bitcoin is accelerating at an unprecedented pace. This isn't just a trend, it's a strategic pivot by Fortune 500 companies. They are increasingly viewing Bitcoin not as a speculative bet, but as a legitimate treasury reserve asset, a digital gold. They're adding it to their balance sheets as a powerful hedge against inflation. Leading this charge are pioneers like MicroStrategy, which has made Bitcoin its primary treasury asset, creating a corporate playbook. Then there's Tesla's groundbreaking investment, a move that signaled Bitcoin's arrival on the main stage. These trailblazers have collectively invested billions, providing a powerful vote of confidence that resonates across the financial industry. But adoption isn't just about holding, it's about utility. The integration by payment giants like PayPal and Visa represents a monumental leap towards mainstream usability. By enabling Bitcoin transactions across their vast networks, they are building a bridge between traditional finance and the digital economy, allowing millions to seamlessly buy, sell, and check out with Bitcoin. This institutional confidence is mirrored by an explosion in retail adoption. Bitcoin wallet addresses have grown by 300% in the past 2 years, with over 100 million people now holding Bitcoin. Analysts draw parallels to the early exponential growth of the internet, indicating a powerful network effect is taking hold globally. Underpinning this ecosystem is the mining network, which is expanding and becoming greener. Addressing environmental concerns, the industry is undergoing a sustainable energy revolution. Miners are actively seeking renewable energy, and data shows the sustainable energy mix has now surpassed 50%, turning Bitcoin into a driver for green energy infrastructure. Finally, the infrastructure supporting Bitcoin is maturing rapidly. Innovations like the Lightning Network enable near-instantaneous, low-cost transactions. For institutions, the rise of regulated custodians and ETFs provides the secure, compliant on-ramps they require. This robust ecosystem makes it easier and safer than ever for both individuals and corporations to participate in the network. Looking at the short-term outlook, all major technical indicators are pointing toward continued upward momentum for Bitcoin. Market sentiment has shifted from extreme fear to cautious optimism, creating ideal conditions for sustained price growth. Bitcoin's decreasing correlation with traditional markets suggests it's finally maturing as an independent asset class. Long-term projections suggest Bitcoin could reach $500,000 per coin by 2030 if current adoption trends continue. The stock-to-flow model indicates we're entering a phase where Bitcoin's scarcity will drive exponential price appreciation. Some experts believe Bitcoin could eventually challenge traditional reserve currencies as global monetary systems evolve. Let's quickly recap the 5 crucial Bitcoin developments we've covered today that are shaping the market. First, Bitcoin's technical analysis shows strong, bullish momentum with increasing institutional volume. Second, leading analysts predict significant price appreciation based on adoption trends and market fundamentals. If you found this Bitcoin analysis valuable, smash that subscribe button and hit the notification bell for daily crypto updates. Next week, we'll be diving deep into Ethereum's upcoming upgrades and how they could impact the entire crypto market. Thanks for watching, and remember, always do your own research before making any investment decisions.